Good morning, everybody. Can you guys hear me and see my screen? I did have some technical difficulty, so a little bit late getting started today, but overall, good day. Ready to get going here. A little bit of a CPI spike, selling it back a little bit toward the open. We are doing a live stream today featuring IWJ Pivot Point Pro, which is our trading view indicator. We absolutely smoked it yesterday. If we go over and look, all of these buy signals right here. Well, actually, let me step back. So if you're new here, we are demonstrating our trading view only indicator. You have to have trading view to use it. It's called IWJ Pivot Point Pro, and it gives you basically reversals in the market. And it's been absolutely destroying the market. We are up $29,000 on the year through the first 5 months of the year, and that's based on a $100,000 account. So that's 29%. May was a little bit rough. We had a small losing month in May. But overall, for the first 5 months of the year, we are absolutely killing it, up 29% on our portfolio. And that's how trading goes. You're going to go through losing streaks, you're going to go through winning streaks, but our wins far outweigh our losses. And that's been demonstrated for many years now and repeatedly. So the indicator itself, it's price action based. So unlike other indicators that are backwards looking, our indicator is forwards looking. It's defining key levels, trading off of those key levels, and understanding when to get in and out of trades to give you the best possible edge in the market. So it trades high probability trades. Now, probability doesn't mean guarantee. It means it's highly probable that that trade will go your way. Highly probable in trading is about 60 to 70%, meaning out of 10 trades, on average, you will win 6 to 7 of them. That doesn't mean that every 10 trades you get to win 7 trades or 6 trades. It means that over time, the law of large numbers will play out, and that's the kind of percentage you'll see. Thus, you get a losing month like May, but May was down 90 cents. It was about a $2,000 losing month, so about 2% on 100K, but we are up 29%. So through 5 months, we have increased our capital by 29%, even with a bad month in there. So to beat the market, if you want to be successful, you find an edge, you find a program, you find what works, and you just apply that edge relentlessly. You do it over and over and over again. And if you do it properly with proper sizing, you'll beat the market. And that's what our indicator does. So yesterday we got a buy signal right out of the gate. We got a couple more just because there was some chop here, but we never stopped out. So all of these buys can be considered one buy. They moved it up. We won here. These two sells, again, can be considered one sell, except for the fact that we actually had a winner here, a small winner. They came back up, stopped us out. They gave us another sell, and we had a really nice winner here. They spiked it all the way down. They give us a buy right here, really nice winner up. And this sell here was also a really nice winner. So 4 wins, no losses yesterday, and a really, really great day. So the indicator absolutely killed it. We are running some incredible deals. We have Morning Christian, welcome to the stream. Morning Cats, welcome to the stream. Morning Daniel, welcome to the stream. We have a couple of deals going right now. So if you get the yearly indicator and you're not part of my group, you get the beginners and advanced Elliott Wave courses for free. So that's $149 value, I believe it is. I haven't looked honestly in a while on my website. You get the, let's see, I got it right here. $177 value. See, it's even better than I thought. $177 value on that. You get both those courses for free, and you get 30% off of the monthly indicator for the first month if you want to try that out. So the indicator right here, it's $59 a month. It has a 30-day money-back guarantee, so you can try it out. You can just put it on your chart. You don't even have to trade it. Just see how it does for a month, and if you don't like it, you didn't risk anything, and you got to see it. And if you do like it, like most people do, you will keep it and keep moving forward and make money with it. The yearly, also, you get 2 months for free on that. So it's $590 for the year. You're getting 2 months off, and you get a 30-day money-back guarantee on that as well as the 2 Elliott Wave courses. So there's a link to this down in the description. If you're interested, you can go check that out. Sorry if I'm talking a little fast here. I'm trying to get everything in before the bell. If you're in my group and you've been trading, we do have that swing long that's doing okay right now. We bought it all the way back here around 59.40. So really nice move. Hopefully they can follow through today on that spike up. We're looking at 6,100 as our next target. The overall counts have changed a little bit. If you haven't been in my rooms, I know my YouTube videos have been missing because I've been in the process of moving and getting settled, and we're doing a lot. Like right now, we're actually on the Skyhomish River up in Washington, and so I'm just a little behind on getting stuff settled and getting videos back up, but that will change this week. I should have a video today and moving forward, so I do apologize for the lack of videos over the last couple weeks for the general public, but my room has gotten their videos almost every day. So if you're in the rooms, you know you get the content. So for our counts, off the highs back here, we're counting this as either a wave 4, which is now the primary count. We had to adjust that a little bit here, or a wave A, which would be the secondary count. We were looking for a bigger pullback out or just above this box. They gave us a smaller one here. And now it does look like they want to take the more direct path higher. So until or unless they break below this wave 2 low at 58.50, the bulls are in control, and we would look to 63.50 next as new all-time highs. And then from there, we would look for the market to pull back around that level. Obviously, they can extend. But that would be an area we'd be looking for them to start to pull back, and then we'd have to assess the structure of that pullback and look for support to break before we talk about bigger pullbacks or bigger things like that. But that would be the idea, is they hit 63.50 and start a bigger pullback. Just like in trading, Elliott Wave just talks about probabilities. What's the most probable path the market would take? And actually there's 2 or 3 paths, usually just 2. And so that doesn't mean anything's guaranteed, but what it does do is it takes an infinite number of paths the market can take, narrows it down to about 2, and gives you the key levels to tell you when that path is likely following through and when that path is failing. In this case, our downside is 58.50, and then 57.50 is the real level for the bulls for a bigger pullback. And then we would look at structure. So until they break 58.50 would be a big warning. If they break 58.50, I would start to be concerned for a shorter term anyway if I was a bull, and then 57.50 after that. And if those break, we know to switch to our alternate count, which would be a 3-wave pullback and then higher. Or if they get a 5-wave pullback, we would look lower. So what we do is we take Elliott Wave to give us our path, our most likely paths. Then we look for setups that confirm that path. Then we trade those setups. So if you watch my videos and you're like, oh, well, how would I ever know to trade? You give an up and a down. It's because we know what the key levels are, and when those key levels hold, we trade a certain way, and when they break, we trade a certain way once we get the setup we're looking for. In the case of the long we're in right now, you had a wave 4, and then you had a 1, 2, 1, 2 setup, and we took the trade off of that. And so we were able to get in and catch this move up because we had a really good setup. And our swing long is doing really well. We've already taken a little bit of profit on it. We have much more profit that will probably take some today, just depending on how the market trades overall. But that's what we're looking for on the ES. On the NASDAQ, it's going to be exactly the same with different key levels. We're looking at the high down to the low being either a wave 4 or a wave A. And then we're looking for this move up to be wave 5 to new all-time highs, which would be the primary. And we'd be in wave 5 of that right now. So wave 5 would take us up to 23,358, I believe it is. Yeah, 23,358. That would be our primary count. Our next target being 22,241 and 22,504 would be our next 2 targets before we look for a bigger pullback. So it will go something like this. Oops. Up into 23,358. Can extend up to 24,000 or even a little higher than that. Doesn't have to stop at 23,358. That's just the target. Somebody said my volume was low. Hopefully that helped. See if that helps you guys hear me a little better now. For the NASDAQ key levels, they need to break this wave 2 low at 21,100. If they break below that, obviously this becomes the next support at 20,700. But below that 21.1 area, I would be looking for a bigger pullback at that time, and looking for them to eventually break this low. So if they come down here, they're probably going to bounce it the first time and then break down like this. And we'll see if they give us 3 waves or 5 waves to the downside. 3 waves would be bullish. 5 waves would be bearish. If you have any questions about the count, please let me know, and we will go through those. Our key levels on the SPY today, we have a call wall at 605. We have high volume levels down here at 600, 599, and our put wall is all the way down at 595. Our next call wall is up at 609. They have pushed through 605 in the pre-market, but they gave it back. So we'll see if they're able to break through this call wall here. We're looking for 6100 ES as our next target. That would line up pretty well with this 609 area. So that would be the next area we're looking for the market to come up into. The blue here is post-market trading. The yellow is pre-market trading. We don't trade any of the trades in here. So all these buy and sells you just ignore because they are too choppy and too low volume and just after hours. So we ignore that, but they do need to be on for the indicator to work properly. You do need real-time data on the ES and the NQ, and the reason for that is if you go to our settings, we're tracking the ES and NQ in our indicator, and we're looking at the SPY on the chart. And what it wants to see is, does the SPY, the ES, and the NQ all have confluence? Meaning, is it broad buying across all 3 markets, or is there discrepancies? Is the SPY up but the NQ is down? So when you get broad buying or broad selling, that gives you a much greater indication of a winning trade possibility. And so it tracks the futures markets, and when it sees all 3 are lined up, it gives you the buy. Well, among other factors, it gives you buy and sell signals. So you do need real-time data on the ES and NQ, even if you're trading SPY options like I do. We have a lot of futures traders in my room, and this can be used on any stock or index or anything else. If you're going to use it on another stock, you'd simply switch your chart to, let's say, Apple. And if you do that, you have to come in here and you adjust this, and you just make this say Apple. So you click on that and put in Apple. And then you click the Apple ticker, and it will change this to Apple. And you do the same thing for the NASDAQ. So you want both of these to say Apple if you're looking at the Apple chart. And then you can use this on Apple or any other stock. So that's how you do that. There are full instructions when you purchase. Again, 30% off of the first month, or free Elliott Wave Theory courses with the yearly. And guys, it's been absolutely killing. Like I said, yesterday we did 4 winning trades, no losers. Really, really good day. June's been off to a really good start, so it's really helping traders. May was really choppy. What you got in May was all of the price action happened in the pre-market. So what you were getting was a move up in the pre-market, then the market opened and it did this all day. So you got a nice move up as far as the market was concerned, but as far as the day of trading, it was really bad. So there wasn't the normal trading opportunities we see, and that becomes very difficult to trade, and that's why May was a little bit of a choppy month. But again, if you're just joining, we are up 29,000 for the year. I'll actually bring that in 1 second here. Hope everybody's having a good hump day so far. Matt, who does not work for me, he is a paid subscriber. He tracks all of my trades and keeps me honest. He matches up my results at the end of each month to make sure that everything I say is actually happening. So here's his, at the end of month of May, here is his post for me. I'll make that bigger so you can see it. So the results for May were negative 90 cents times 25 contracts. It was a negative 22.50 month, which sucks. You know, you never want a losing month, but that's part of trading. You need to understand that losing is part of trading and that it's a learning opportunity on how to improve. Our profit for the year, that means the from January till May through May, 29,725. This is based on a 100K account. So we're up $29,000 or 29% on our money. Day trading rules protected our capital well this month. It displayed a pattern of big moves overnight and chop during trading hours. So Matt keeps a good eye on things. He keeps me honest, and I'm honest. I don't hide from losing months because they're part of what we do. They're part of trading. They're part of successful trading. You just take a trading plan that works and you apply it over and over again with the expectation that over time you will do really, really well. And last year we had 9 winning months and 3 losing months and made 29% on our money for the year, which is pretty darn good. And this year we're already up after improvements were made to the indicator. We're already up 29% after 5 months, and we are 4 winning months and 1 losing month so far. So, if you buy and hold, you're going to have a losing month. If you day trade, you're going to have a losing month. If you swing trade, you're going to have losing months. No matter what you do, there are just times you're going to be involved in losing streaks because the market isn't easy to trade. It's very difficult because it's emotional and it makes you emotional. And if you just follow rules, you can beat the market over and over again, but that doesn't mean you're going to beat it every single time. It will humble you at times. How much do you risk per trade? So that's a good question. All of that is detailed, but I do 25 contracts a trade. So generally, options contracts are about $1.50 or so, which makes the trade about $3,000 to $4,000, which on a 100K account is about 3 to 4%. So we're risking 3 to 4% on each trade, even though we're technically not. We never close a trade at 0 on our day trades, so we're not risking all of that money. We have stops. On any given trade, we might lose, 20 to 30 cents times 25, which is what, $400 or $500, which overall is 0.05%, or 0.5%, I should say. So total capital outlay 3 to 4%. Total risk, I'd say probably 0.5% of our overall capital. And we're risking 0.5% and returning 29%. I think that's a pretty darn good risk-reward model. Do you still think there's strength remaining in gold? I do. It could consolidate and pull back here. I haven't looked overnight at where we're at. But silver is getting ready to break out, and gold will run a little bit with silver. Not as much. Gold typically tops before silver. But I do think silver or gold still has a little bit of one more push in it. But I would we just actually got back into our precious metals account. So if you're new here and you haven't been, let me scroll up. There it is. If you're new here and you haven't been in my room, I need to flag that one. Last April in 2024, I told everybody to get into precious metals. I gave them an account, the precious metals account. It was at about $49 at the time. It is now at $90. So this is our 401k money. So in a little over a year, we've almost doubled our 401k money, while the market has been sideways to down, the general market. So there are lots of benefits to being in my room and being part of my group. It's not just day trading. It's not just swing trading. It is all different types of capital management and understanding. Does look like gold popped a little bit up, back up to 309. And silver should be up then. No, silver's still down. Okay, so silver rejected the breakout a little bit. I did tell my group that silver would likely come back and test that breakout, so this is not totally unexpected. But yeah, I do think there's still more run in gold and stuff. Got about 5 minutes before the open, so I'm going to get started getting ready here for trading. Now, when you're using the indicator, we are in a sell right now. So they already gave you a sell in the pre-market, right? So we're going to look for either this last bar to give us a sell stop. And if it gives us a sell stop, then we'd be looking, that means the market is still buying. And so we'd be looking for a sell to start the day. If they bring it down and continue to the downside, then we'd be looking for a buy to start the day. So I try to get myself ready and understand where we're going to be at when the market opens. As of right now, we are still in what's called a buying cycle, even though we have a sell signal. How the indicator works is, so you get a buy down here, and it starts a buy cycle. So it goes through buying, buying, buying. As soon as it starts to see weakness in that buy cycle, it issues a sell. Now, if that weakness gets changed and they go back up and you get stopped out, we're still in a buying cycle. We never flipped into a selling cycle. Just because a sell came out doesn't mean we're in a selling cycle. It means that there was weakness in the buying cycle, and this is how we identify close to tops and bottoms. Sometimes we get them exact, sometimes a few bars off, but it has to see some weakness first before, and weakness isn't just a couple of bars of red or green. It's a whole bunch of different factors. It looks at about 175 different things. And when those things align properly, then you get the buy or sell signal. But it needs to see weakness developing across those things it looks at, such as key levels, volume, some moving averages, some other indications. There's just a lot of different things it looks at. I can't get too in-depth with it, but it is proprietary, so I don't want to give away too much, but it looks at a bunch of other standard deviations, things like that. So, and those things are weighted. So something that's backwards looking, like moving average crosses, is weighted like, 3 or 4% maybe, whereas a high volume level that has been traded off of is weighted maybe at 10-15%. And it calculates all that together to give you a buy entry or a sell entry. The indicator is really simple. You get a sell, you enter a sell trade or a put trade. You get a buy, you enter a long trade or a call trade. We have trading rules. I'll try to go through them real quick. We got 3 minutes. So if this is your entry, we set our stop 50 cents of SPY price below our entry. So if we got in at 604 exactly, I know these lines aren't there, but if we got in at 604 exactly, then our stop would be 603.50 on a call, and it would be 604.50 on a put. So 50 cents of price is your stop. Now, so that's the downside. To the upside, we take our first win at 20%, and we close half the trade. So what we're looking for is about 7 to 10 points of ES move with potential, meaning we should see 7 to 10 points of move, which should give us about a 20% win, and then it has potential to break out or break down. The reason we take the 20% is these small wins cancel these small losses. And then when we get runners, which we get quite often, we had two of our 4 trades were runners yesterday. When we get runners, this is all basically profit. So we use our small wins to cancel our small stops, and all of our runners become profit. So it gives us a very low risk model that allows us to capitalize on big wins while minimizing losses. So all of these instructions are given to you in the indicator when you purchase it. Again, 30-day money-back guarantee on that, as well as a free, well, depending on what you get 30% off of the first month, or you can get free Elliott Wave courses. Once you purchase it, you'll come to this page. It'll ask you to enter your TradingView username so I can get you set up. And then if you don't have a TradingView account, don't get one before you get in here, because I have a link in here that will give you a discount. Full disclosure, I get a kickback from TradingView, but you get a discounted account, so we both win. There's no reason not to do it. Tells you how to set up your TradingView with the indicator. So it tells you how to set up the indicator. Goes through your day trading strategy, exactly what we do and how we do it, and your trend day strategy. So trend days, which are hard to trade, we try not to trade very often, because what the indicator is technically looking for is the probability that the market will reject heavy support and heavy resistance. And so on trend days, it doesn't reject, it goes. Meaning, if it's a trend day up and they get to the resistance here, they get through it, and vice versa. If it's a trend day down and they get to support, they get through it. So we don't want to counter trend trade that. So I teach you how to learn how to identify a trend day and what that looks like. So you get all the training you need with the indicator, and yeah, it's a really, really great tool, guys. I know I say it is because it's mine, but I think anybody in my room who uses it properly would tell you the same thing. All right, we opened here, pushing down. We've got this sell signal already. We are in a buy cycle, so we won't necessarily be looking for a buy yet. They would have to sell down quite a bit more for it to, or at least go sideways quite a bit more for it to issue a buy signal, because this buy was so strong to the upside that it takes a lot to reverse it. Now, they did see weakness in that buy and gave you a sell. We don't trade this because it's pre-market, but it did tell you weakness was here, and you're seeing weakness. So indicator generally spot on with what it's looking for, and that's why it's such a powerful tool. ES pushing down here, NASDAQ not as much yet. This is the first bar of the day, so we'll have to see. Now NASDAQ is catching up a little bit. We'll have to see how they go. Very often you'll see them spike CPI, retrace it, and then go again. But if they do break below this 602.34, 35 area, that would be an interesting interesting development. 601.12 is going to be our key level. That's our pre-market low. Getting through that, they have support at 600. So as of right now, they're pushing down on this sell. We'll see what happens from here. Just as an FYI, since I brought that little thing up, if you hit the three dots, you can do an alert on IWJ Pivot Point Pro. If you click on it, it'll ask you if you want to get a buy alert, a long stop, a short stop, a sell and a buy, whatever. It gives you all the different alerts you can set up for your indicator. If you haven't done that already, you can do that. So as a position develops, in other words, if we were looking for a long here, we're not yet looking for a long. If we were looking for a long here, once conditions start to be met, you're going to see that long. Uh-oh. What's going on with my mouse? You're going to see that long start to flash on the screen. So there we go. Sort of. Give me 1 second here, guys. Computer's been acting a fool today. So you're going to see the buy flash on the screen or the sell flash on the screen as it develops. So as conditions are being met, it may appear and disappear. As soon as we see it appear, we take the trade. We don't wait, because what happens is if you started to get a buy here, it can move really quickly before the bar closes and confirms the buy. So we take it as soon as it appears. That usually gives us the best possible entry and allows us to make sure that we can get the 7 to 10 points we're looking for in reversal. And we have a lot of what I call one bar winners, meaning you may get a spike down, get a buy signal, they push it up in the same bar, you win here and take profit, and then in the same bar they come back down and end up stopping you out. That has happened many, many, many times. And we call that a one bar winner, where we didn't even have to let it run. It just gave us the winner right away and then, stopped out. So those are all just different things that can happen in a scenario with the indicator. Overall, the ADD was very positive. It is plummeting a little bit here at the open. So you had it opened at around 1,300. It is now down to about 1,000. And Vold is slightly positive. So not as bullish as you would like to see on a CPI day where they spiked it all the way up to 606.50. You'd like to see it a little more bullish in the internals. You'd like to see the ADD find some support and push back up, hold this 1,000 area. If you don't know what the ADD is, it's the advanced decline. Basically tells you how many stocks are above, the delta between how many stocks are above yesterday's close and how many stocks are below. So right now about 1,000 more stocks are above their delta, above yesterday's close than below. Does the indicator take into account gamma levels? Yeah, that's a very key area. Options and prices are factored in. That is one of the things. Do you think there is still some string theory? Oh, you already asked that one. Sorry. Yes. Yes, I do still think there's strength in gold. So we like to see supporting evidence right now. ES and NQ, or ES has closed the gap. NQ close to closing the gap, if they haven't already. RTY holding up a little bit. It's still green. Transports are green. Banks not giving us great support here, but SMH and SMH is doing well. They're leading, and that's what you want to see. We are in an AI bubble. So the semiconductors should be leading more often than not. Most of the Mag 7 is green. So we will look for the market to try to find support. What's our options pricing right now? Options pricing is a great tool to understand volatility. On a day like CPI, you're generally going to get elevated options pricing because of the catalyst of the CPI. So at the money, you're looking at basically $1.40. So yeah, they're pricing in about a 30-point move or so right now, which is not huge. So let's see if they get this gap close and reversal here. Unfortunately, we still have not moved fully into a selling cycle, so we will not get a buy signal if they do launch from here, but we'll see what they give us as we progress through the day. Sometimes these CPI and Fed type days can be hard because they give you such a big move before the market opens that it kind of skews things a little bit. As I mentioned in the opening, 20, 30 minutes there, we don't hide from anything. Like I said, May was a choppy month. Wasn't great. But overall, we're doing great. And this is not a place to come try to get rich quick. If that's what you're looking for, if you're wanting to change your trading life, this is the place to be. If you want to learn how to actually trade, this is the place to be. Am I the best trader in the world? Of course I am not. There's always somebody better than you at anything, but I am a successful trader, and I have put together a blueprint for trading that works, and I've handed it to you and given you everything you need to copy that blueprint and be successful as well. And that's what I'm really here for. I'm here for the, hey, Jake, I've made money for the first time in the market comments. Hey, I've been able to let my wife stay home from work after being pregnant and take care of the kids because I've made so much trading because of you. That's what I'm here for. I'm here for the progression of traders and seeing you guys learn and become, transform into winning and then hopefully eventually professional traders where you can just do this robotically and not worry about the things that don't matter. Like, so many people worry about each individual trade. Oh, how'd your trade go? I lost, or maybe I won. I don't know. It doesn't matter. That trade is irrelevant. The setup was right. The ability to use my trading plan was executed perfectly. And whether I won or lost on that singular trade is irrelevant. I'm looking at thousands of trades. I'm looking at the big picture. I'm looking at what happens to my money over time, not over 10 minutes. So if you are obsessed about a single trade, you need to really work on your mindset because it's completely irrelevant what happens on any given singular trade. Trading can be treated, losing, I should say, can be treated as an excellent, excellent learning lesson, especially when you're breaking the rules. If you haven't checked out my podcast, The Subconscious Trader, it's about the psychology of the trader and why you lose and why you are the problem and not the system. Almost all reputable traders have a winning system, yet people lose with them all the time because they simply can't follow the rules. If you have a losing trade and you are objective about it and you stand back and you say, did I follow the rules? And if the answer is no, then you need to say, okay, then what did I do and why? Why did I enter the trade here? Was I mad because I lost a previous trade? Was I bored? Was I FOMOing? Did I have fear of losing everything, fear of missing out? what mistake did I made there and how can I fix it next time? Oh, I'm bored. Okay, well, I'm going to get up and go for a walk or work out or make a sandwich or do something, anything but trade. If I don't have a setup, I don't trade. That's simple as that. So losing should be treated as an excellent opportunity to improve as opposed to a it doesn't work mentality or this is dumb or blah, blah, blah. Name the stupid thing people say when they can't own their own mistakes. I make lots of mistakes, guys. And when my trading truly changed and I transformed into a guy who could do this full time was when I started looking at trades and saying, what happened on that trade? Why did I do that? When I started looking at trades that I knew were bad trades that somehow turned out good because I got lucky, but the setup was horrible, I started saying, all I did there was reinforce a bad habit. When you can make those kind of changes in your psychology, you will see instant results. Your losses will be less. Your wins will be more. You'll stop closing trades too soon or letting trades lose too long. You'll just click on stops. You'll click on gains. You'll click on the right numbers, and you'll trade like a robot. And that's essentially what you want to do. I let myself free from work. Thanks for the indicator. Now only my pregnant wife is working. Nice, Daniel. Nice. The irony of I'm a poker player too. I love to play poker. I haven't played much anymore. 2 kids takes that away from me quite a bit. But back in my younger days, I did pretty well at poker, and I certainly wasn't like Phil Hellmuth or anything, but I did okay. And the similarities between poker and investing, at least day trade investing, are enormous. It's very emotional. You have to be able to control your emotions. You have to understand that you're playing probabilities. If you know anything about poker, some of you won't, but if you have 2 aces pre-flop and the money gets in, you have to get your money in, and that may knock you out of a tournament because somebody gets lucky against you. But you did the right thing. You can't fold the best hand. So investing is the same way. You take a setup. Oh, I got a setup. I'm getting my money into the market. Now, you're not going to be all in like in poker. It's a little different. But I'm getting my money in the market. And if it doesn't work out, you still did the right thing. You just got a trade that didn't work out. In poker, you might get unlucky. In trading, you might just didn't get, the probabilities didn't go your way. So it's the same basic concept. And Doyle Brunson famously said, Texas Hold'em takes 5 minutes to learn and a lifetime to master. And most of that mastery is emotion, boredom, those types of things where people can't handle either the high adrenaline rushes that come with wins and losses, or they get bored and they can't handle sitting for a long time and not getting any hands. Same thing in trading. They can't handle the adrenaline rushes that come with winning and losing, especially losing, and they get bored sitting here watching bars go up and down and nothing happening. So they say, well, I want something going on. I think it's probably going to go up, so I'll just get long. And that's a recipe for disaster. While we're waiting here, slow moving a few bars. If anybody's got questions, please ask. I'm happy to answer them. Can't necessarily get too deep into other charts because we got to keep an eye on what's going on for trading. But we do want to, I can answer questions and go through things to clear up anything or go through anything that you guys want to hear or see. As of right now, obviously things change, but as of right now, the selling's a little bit weak. You generally want to see selling accelerate a little more. And if they start accelerating, then you can start to look for a bigger pullback or drop or sell off. But as of right now, they're chopping a little bit slowly. As I say that, they're trying to push down now. But at a key support area here, looking for the bulls to bounce this. If the bulls are unable to bounce here, 60112 would be a next key level. That is the pre-market low. We would look for that to be a place the market tries to bounce. Can I use the indicator having multiple charts up? Yes, absolutely. How do you know when to expect a call or put is coming? More specifically, how can we know we are on a sell waiting, but besides blindly waiting for the indicator, what could help expect it? Well, I mean, you can see right here that we're in a sell. So there's only two options, right? So we're coming down. The two options are we get a sell stop and they continue up, which is not a trade, or you get a buy signal. So if you have a sell up here, the next signal you would expect to be tradable would be a buy. Now, if they went up here and gave you a sell stop, so you stopped out, then you'd be expecting another sell because the sell stopped. You're just looking for the opposite of what's on the chart. So if a sell's on the chart, you're looking for a buy. Potentially, it might be a sell stop. In this case, so you had a buy here, you got a long stop, meaning they came down and stopped out. So you're looking for another buy, and you got one. You had a sell here. They sold it down far enough to get the buy cycle or get through a sell cycle. Then you got a buy signal, and the buy worked out pretty well. And then you got the sell. So it's just the opposite of what's on the chart. We are through a sell cycle now, so we would be expecting a buy coming up. Speaking of that, so I'm going to go ahead and start getting my trade set up. So we are into a key area. And a buy off of here would be something we'd be looking for. Typically, I'm at or one strike out of the money, just depending on how that looks. Decent volume on a potential reversal candle 5-minute chart. So 5-minute, we're not looking for huge runs necessarily. Of course, every rally starts from somewhere. Every sell-off starts from somewhere. But on this 5-minute chart, we do have a nice little reversal bar here as we come into the 7 o'clock hour almost. Looking for a buy signal next. So I give this tip each week. I'll give it again this week. We are looking for a buy signal. If they give it to us right at this convergence of VWAP and the 21, I like to wait just a minute because you're generally going to get a pullback off of that before they break through. and you can get a little better price on your option and sometimes save yourself from getting stopped out unnecessarily. So anytime they give us a buy signal right at VWAP and the 21, I try to give it a second and see if they reject it, because they do quite often. Sometimes that plays against you, but more often than not, the first time into that zone, they're going to reject it a little bit. Not full rejection to new lows, but pull back off of it maybe 20, 30 cents, which gives you a much, much better entry price. Now we have seen them come up and test here. This is the second time they're coming to test, so we'll see what they give us. I have a 604 strike set up currently for my buy. So if you guys, this is how I get in so quick. I already have a 604 strike set up with a limit that is spanning about $1.05 to $1.20. And then as soon as the trade comes up, I move that limit price up with price of the option. And as soon as the trade comes up, I can just hit buy. And I have such a high limit price that I will get the closest to the, it's basically a way of doing a controlled market order. If you just hit market, they will absolutely smoke you. It's a terrible idea. But if you just put your limit up about 5 or 7, 10, even 10 cents above current price, you'll be able to get really close to current price most of the time. Now, on fast moving markets, sometimes that's not the case. But it just, just kind of depends. So this is this week's high zone right here. So this is the printed high. They'll have to get through that. They'll likely reject the top of this candle at 604.18 the first time they get up there. Again, doesn't have to be a full rejection back to new lows. It can be a 20, 30% rejection or back down to VWAP in the 21. But they likely won't blow through this breakdown candle right here, the opening candle, the first time they try. Just different price action qualities to keep in mind. Why were you explaining the two options? I know what to expect. More question is more, how do you know it was too early to get one? You don't. And I don't mean that like in a bad way. It's just I can see the back end of the indicator, which is where all the proprietary information is. And I can see when they have shifted from basically green to red or red to green. And until they make that shift, you're not going to see a sell or a buy. The opposite. You're going to see a stop. So, for instance, this would be in green right here, green, and then it's in green. Then it starts to shift into a. So when this comes up, it's in red. It's in red, and as this moves up, it'll eventually turn green. And then once it turns green, once it shifts back to a weakness in that green, it'll still be green here, but it's showing weakness. And then you'll get a sell, and that sell has to shift into red. And then once you see weakness in the red, you'll get a buy. So you won't be able to see that because it's on the back end. You just have to wait for the buy or sell signal to appear. But if you just have your trade ready, you'll know because it'll either say buy or sell stop. Excuse me, it's early. It'll say buy or sell stop, and if it says sell stop, well, I'm not getting a buy signal here. I'm getting another sell signal eventually. What about including the red green signals in the indicator so you can be better prepared? I would have to look into that. I'm not sure that can be done. I saw a stat yesterday, and I'm going to butcher the numbers, so go ahead and take this with a grain of salt. This run up off of the lows back in, I think it was April, 41 sessions, I believe it is. The market is up like 20% or whatever percent it's up. I don't know. That's where I'm going to butcher the number. But anyway, the 41 session run off of the April lows is the third strongest or fastest move in market history. So when I was expecting a pullback, I certainly wasn't looking for the bronze medal of market rallies. You know, if it's the third fastest in history, obviously it doesn't happen that often. So this is when we talk about probabilities. It's much more probable the market's going to come up and pull back first before going to all-time highs than it is going directly to all-time highs. However, there are times you're going to get the third fastest move in market history, which is much less probable, and that pullback doesn't appear. That happens sometimes. It's and then when people say, especially on YouTube because they're really smart, when they say, this is what happens when you don't understand bull markets, you miss the move. Because you're waiting for a pullback, they don't understand the probability of the game. They don't understand that more often than not only did they not get the move, but they got in late, got fear of missing out, then the pullback came, they got slaughtered, then you could catch the move up. Now, did they get to catch their one out of, 100 years of market history move? Yep, they got one. But they didn't understand that all they did was reinforce a bad habit there. It's okay to miss a move. That is perfectly acceptable and should happen. If you're trading properly, you should miss moves because not all moves are set up properly. There are moves that are just out of bounds. They just aren't normal market moves, and they are irrational, and they don't make sense in the short term. And so if that's the case, you probably didn't trade it because it probably, if it doesn't make sense, it doesn't have a setup. And so you miss the move. Who cares? There'll be another one tomorrow. There'll be another trade tomorrow or the next day or whatever. It is a game of patience and really just robotic, being a robot, killing your emotion. If you're not missing market moves, then you're over trading because you're also, to catch every market move, you're going to get a lot of losing trades. It amazes me that the indicator is right when I think the market is going another direction. I have to train myself to trust. 100%. I think I've posted at least 100 times in my room. I don't like this trade that the market or that the indicator just gave us, but the indicator is smarter than me because I'm using emotion and rational thinking, and the indicator is using simply data. And that's the difference. You're thinking rationally about the market, and the market is irrational. Why? Because the market is emotional. Why? Because it's controlled by people. Yes, there are indicators and algorithms that trade. That is a blatant fact. But those indicators aren't all of trading. You still have huge hedge funds. You still have huge retail. You still have huge other trades that come in, corporations, everything else. And all of that is emotional trading. All the market is emotion on paper. And emotion can be measured, and it's predictable, and it's why Elliott Wave is so powerful. It's why price action is so powerful. It's why understanding that is so powerful, because if you're just simply trading based on, well, earnings said this company's good, why'd it go down? You're going to be confused a lot. The news is irrelevant. Earnings are irrelevant. Everything, to me, war is irrelevant. Geopolitical events are irrelevant. Do they move the market? Yes. Please don't misconstrue what I'm saying. Of course the Fed moves the market. Of course earnings move the market. Of course wars and different things move the market. But if you're thinking that a war is going to push the market down, you're probably going to be really confused when the market went up 20% off of the Russia invasion of Ukraine. If you think that high CPI is going to push the market down, you're going to be confused in October of 22 when we had the highest CPI report in 7 decades and the market went on to one of its most historic rallies ever. You're going to be really confused when COVID is ravishing the world. The country is shutting down. The Las Vegas Strip is shut down for the first time in history. Joblessness is unemployment is higher than it's ever been. Inflation is higher than it's ever been. Companies are shutting down. There's no cure for the disease, and we find a bottom and have one of the most historic rallies of all time in the face of all of that. The news is so irrelevant, it doesn't even make sense. This is why talking heads on TV are always saying things like, oh, I guess good news is bad news this week. I don't even know what that means. I don't even know what stupid thing that is. News is simply news. It's irrelevant to the market. The market is so far ahead of the news, it doesn't even matter. There was a study done. I can go look it up, but another time I'll post it. Maybe I'll be in one of my psychological videos about the news. There was a study done that said, they went back through all the major news events that would affect the market, so inflation, geopolitical events, Fed, anything that they thought would affect the market in some way, and caused major market moves, or at least was the catalyst for it. I'm not going to say it caused it, but anyway, they went through all of that, and what they found out was, even if you knew the news ahead of time, you would still only have about a 50-50 shot of guessing the direction right. Because if you're looking at the news, you go, this is positive for the market, so you'd want to get long. Well, the market went down. Oh, this is terrible news for the market, so you'd want to get short. Well, the market went up. So they said even if you knew the news ahead of time, you still only were 50-50 on getting it right because it's irrelevant. If you objectively look at the news, can you cherry pick and say, oh, see, Trump said tariff and the market went down? Of course you can. However, if it's not consistent, it's not a factor to consider. And the news relative to the market is extremely inconsistent. Personal bias, the news, earnings, all things that affect people emotionally, make people mad, make people make bad trades. Those are all useless items to have in your brain. And don't get me wrong, there was a long time I studied all of those items and thought, oh, I've got this figured out. And I did not. I did not have it figured out. I would say that you still don't have it figured out. No one ever has the market figured out. If you think you have the market figured out, you'll get humbled real quick. But at least I know what I'm looking for and what is consistent versus what is inconsistent. Very slow day. You got the initial move down. Now we're back up and chopping. This is not conducive for the bears in general for a drop. Again, things can change. Markets can accelerate. Money can come in. But typically, you would want to see the bears accelerate strongly. The slow day follows you. It does. It does. We live stream on the days that they don't trade. It's crazy. They let the market sit, and we get to do a 2-hour talking session while we wait for something to happen. If we zoom out and look at our key levels real quick here. Essentially what they did is they spiked above and then rejected this call wall. And if you don't know what those are, this is where the most calls reside for 0 DTE or expiration today. And market makers really don't want to pay that out. I mean, they can't help it sometimes. The market's going to do what the market's going to do. But market makers can control the market. They have a lot of money and a lot of power and influence. So they want to keep it below this level because they don't want to pay out all the calls that are sitting here. And what happens is if they do get above this level, well, the people who bought all these options, the market makers sold those options. So as the market climbs above this call wall, the market makers are starting to lose money on those sold contracts. So what they have to do is they have to hedge, and they have to buy calls, which accelerates the movement higher. Then you get fear of missing out coming in, which accelerates the movement higher, and this is how you get squeezes, or sell-offs in the opposite direction. So if you think of the market maker as a bookie, which is essentially what they are, they're booking the trades. They're trying to make money off the spreads between the calls and the puts, and they want balance. So they want exactly as many puts as they have calls on a price. If they don't have that, they have to hedge and lay off, to the side that their delta is off on. So in this case, it would be calls. They would have to hedge and buy calls. Well, if they're buying calls and every other call in the world is sitting here, all of those calls materialize at the same time. You get a big squeeze to the upside. Same thing happens to the downside. Thoughts on the dollar? I don't do currency, honestly. I do know that the dollar is weak. There's our buy signal. We're going to have to pause here for 1 second. We're at 604. 119 is our entry. And our stop is going to be 603.30. Give me 1 second while I update this. Going back to that, George, sorry, I don't do currency, but I do look at a weak dollar moving forward for a lot of reasons. Banks are in big trouble under the hood. So if you think of banks, right now they're running like a Ferrari. I mean, they're crushing. They've done really well, or they had been crushing, and they're back toward their highs. However, they're doing it with a I don't know, I'm not a car guy, but I forget the name of the belt that controls basically everything. They're doing it with a belt that's got basically a 3/4 cut in it, and it's holding on by a quarter. And if that quarter goes, the whole engine stops. that's kind of where they're at right now. There are so many debt problems under the hood that people aren't aware of, such as commercial mortgages are absolutely atrocious. They're defaulting at the highest rates in history. Credit card debt is defaulting at the highest rate in history. Used car debt is defaulting at the highest rate in history. Home loans are again climbing. They're not at the highest rates in history, but they're pretty high. You're seeing a ton of unsecured debt or even secured debt that they can't do anything with. You're seeing shadow banking come in very, very strongly. These kind of predatory lenders that have all this money exposed to weak credit profiles. So you're seeing all of this really nasty borrowing that has no payback right now. And when that comes to a head, the banks are going to be in trouble. And when the banks are in trouble, the Fed's going to try to bail them out. But the Fed is several $billion in debt. They can't print more money. If they do print more money, it will devalue the dollar further, and that will continue to crash the dollar. So my thoughts on the dollar are it's going to be weak for a little bit. But, there are going to be other catalysts that make it weaker. We did get in at 119, which means our 20% is basically 24 cents higher, which is, what's that, 43. So we'll look to get out our first half of our trade at 143 if we get there. There was something else I wanted to say there, and I forgot. Darn it. But anyway, banking is an issue that people are not really understanding how bad it truly is. Serpentine belt. There you go. See, I knew somebody who knew cars. I don't know shit about cars. I'll be honest with you. People pull up the hood and they're like, "Did you check this?" And I'm like, I don't know what that means. I only know that belt controls everything because I had one break when I was young and every light on my dashboard came on and I freaked out. Dollar is in context of the lowest level of regression channel on a weekly time frame. Yeah, I mean, if it's there, like I said, I don't track it, so I can't speak to it very educatedly, and I don't like to do that. The comments I made are based on banks and the Fed having to print more money, which I think will be a problem for the dollar in general. I think our credit rating as a country is going to struggle, which will be a problem for the dollar in general. So those were general statements. As far as the price action, I just don't follow it, so I can't speak to it. So I told you this, the top of this red bar right here, the opening bar, that will be the key to get through because that essentially changes your open from red to green. So this is the opening print. The opening print went red. So we are in a negative opening print right now, which means this is a selling area. So the bulls will have to get back through this. If they get back through this, they should be able to squeeze back up to the 605 area. I'd expect a little bit of failure here from the bulls. If they get right through, then they're more bullish than normal. Normally, this the top of this bar right here will cause this a rejection. Now, this bar can turn green. They can reject down and then go back up. But typically, you're going to see this kind of pullback off of this level here. And I'm talking about microscopic pullbacks, guys. I'm not talking about big drops. I'm just saying when you're day trading, microscopic pullbacks matter. So this is a key area for us to get through for our day trade. All right, there we go. Let's get some push now. This little ledge right here we got to get through, and we should go test the highs. That would be nice. Almost there. A little bit more of a push here. Just got to get through the top of this ledge and should book a winning trade. And then we'll see if we can get a runner. Runners are the best. All right, there it is. Book it, Dano. 143 for our first half. We're going to set our stops to 120. And see if we can run this thing out a little bit. So I never let a good trade go bad, so my stop is at 120. If they that is a tight stop right now. We're hoping that they accelerate a little bit here and push out. But we don't want to give back a winning trade. So, the 20 cents typically is going to be a little tight for. I usually have about a 50 cent trailing stop on options price. So if the price was 140, I would have a 90 cents stop. But when we start out, we have to start with a little bit tighter of a stop in most cases, not all. Just depends on the volatility. But if it's truly a bullish move, that should be fine anyway. If it's not truly a bullish move, then we took what we could get, and they pulled back and got us. Probably look to take a little bit off at 605, which is about 50 cents higher from here. 50 if they can get up there without stopping out. That is the call resistance you can see on the screen there. So we would look for that to reject first time through, or technically second time through. They spiked through it in the pre-market, but coming back to that level, you have a breakdown candle right here. I mean, technically they're breaking down from up here, but you have a breakdown candle right here, basically at that level, that should provide some resistance that gives you a small pullback before continuing, if they're going to continue. And there are times that the tight stops hurt us where, they come back, spike our stop, and then go higher. But again, it's okay to miss a trade because that's still a winning trade. And it doesn't allow us to get emotional and say, "Oh, we gave back all of our money. It's going to go back up," and then it never goes back up, and you lose. Not only you turn a winning trade into a bad losing trade. And for those of you that think, well, if you get a winner, it's only going to be, let's see, that'd be about $1.31.12. You only need, on 25 contracts, you only need to average 16 cents a day to make $100,000 a year. 16 cents a day. Everybody thinks, oh, why would you do that for pennies? It's not pennies. 16 cents on 25 contracts is about $400 a day, which is about $2,000 a week, which is about $100,000 a year. Again, guys, 30% off your first month of the indicator. And then after that, it's full price. You get a 30-day money-back guarantee. Or if you want to go the yearly route, you get the Advanced Elliott Wave course and the Beginner's Elliott Wave course for free. So $177 value for free there. How'd the move go? New place? Actually, I'm on the Skyhomish River right now in my RV. We're still figuring all that out. That's why the videos have not been forthcoming for like overnight YouTube videos. Like I said, if you're in my room, you're still getting all the content for the most part that we normally get. We're trading every day and doing all that, but the video stuff has been a little lacking here overall. But the move overall it was fine. The move was easy. Getting everything taken care of. There was a lot of indigestion to get going today, maybe because it was a taco trade. It's not Tuesday, so I don't know what the taco trade is, but maybe because yesterday was Taco Tuesday and people are having indigestion today. Not sure I understand that one fully. Trump always chickens out. Taco. Oh, I see. It's an acronym. That's what they're calling it. See, that's how much I pay attention to the news. I did not know that there was a acronym for it. People are funny about that. I am not here to talk politics in any way, shape, or form. The Art of the Deal, Trump's book from a long time ago, actually talks about a lot of the motives and factors he uses now. And they're still pretty standard tactics used in sales. I mean, the guy did build some businesses that were pretty good. And at any rate, the whole idea of negotiating is you go in with sticker shock, and that's what he did with the tariffs. Oh, we're going to put 1,000,000,000% tariffs on everybody. It's going to be the biggest tariffs, most beautiful tariffs anybody's ever seen. And then everybody's like, what? That's going to be crazy. And then the other country says, yeah, that's crazy. We're not doing that. And he goes, oh, well, how about 20%? And then they go, yeah, that sounds really reasonable instead of 100%. That's a great deal. We made a deal. And he got the price he wanted to begin with. So it's just a negotiating tactic that people are really flipped out about. It's kind of funny to me. I'm not here to tell you anything good or bad about anybody. I don't care. That's up to you guys who you decide to do things with. But that particular thing in relation to just business and negotiating and stuff is funny to me, because it's how you do business. You go in with a price that you know you're not going to get, so that when you get the price you want, it sounds like a deal. And that's, kind of what he did with tariffs, or what he's doing with tariffs. Keep losing your YouTube feed. Any advice on how to fix it? Restarted my laptop already. No, I mean, if it's a widespread problem, I guess it could be the feed, but nobody else has said anything, so I don't think it is. But I'm not sure, George, honestly. $605 would be the next place, Maxine. Sorry, I missed your question up there. No issues, only annoying ads are showing up. It's cutting out every few seconds. Not sure what's going on with that, but the ads, I mean, I do, but the cutting out, I'm not sure, guys. I have excellent internet here, it says, and so I'm not 100% positive on that one. So the indicator gets us in, waits for all this chop to play out, gets us on the breakout. So far, we're riding this up into 605, which will be the next major resistance level. They're actually rejecting just below it. I probably should have grabbed some there, but we'll see how it goes. Slow moving, so we're still around the same price. I mean, we took 143 on the first take, and right now it's at 149. So it's not like it's a monster level. So we may give them a chance to pull back and push through here. And if we only get a little bit of a win, that's okay. Sometimes you hamstring yourself when you take, if you take at 143 and then you take again here at, 152 or 153. Yeah, I mean, it's 10 cents, which is really good. Don't get me wrong. As I just said, you only need 16 cents a day to make $100K a year if you're trading 25 contracts. But I want to give them a chance to really run here, because if they can get through this level and just kind of chop here for a minute, then they're going to come up and challenge this 605.76 level next. So if you're more conservative, you could take a little bit more off here. And I guess you're getting 157. That's pretty good. If you're more conservative, you can definitely take some off here. But if you want to, give them a chance to push and break through, you can do that as well if you're more aggressive in these moments. Donald Trump is living in fool's paradise. I don't know what that means exactly, but typically my rooms and my channels are not for political talk. I know I was just talking about his tariff deals and how he does them, and how that's just pretty standard practice that people are weird about. But people are weird about everything. It doesn't matter what you do. If you're a Democrat, everything the Republicans do is wrong, and if you're a Republican, everything the Democrats do is wrong. Nobody can just talk to their neighbor anymore and just say, "How's it going, Fred?" It's, "How's it going, Fred, and who did you vote for?" And if Fred didn't vote like you, he's a dick. And that's just silly to me. We should all just be good to each other. What rules do you apply for yourself to set and change stop loss levels? So I went over that earlier, but the initial trade, so let's say we got in at 605. That was our entry, exactly at 605, because it's easy math. If we were taking a call at 605, which means we want the market to go up, our stop would be 604.50, so 50 cents off of the SPY price. And if we were taking a put at 605, we would trade our stop at 605.50. So 50 cents is the initial stop. And then once we take our 20%, I set the stop back to basically the price that we got in at. So we got in at 119. We took our first half at 143 and we set our stops to 120 because our price was 119 and I like round numbers personally. So once that happens, as price moves up, once we get to a 50-cent running stop, so 170 or higher, because 120 plus 50 cents is 170, then my stop will move up 50 cents at a time. Now, when we hit key levels, like we just did here, like I said, you could take here if you were more conservative, because it's going to reject off of this level a little bit, and maybe a lot of it. We'll see. You could take some off at key levels. That's what we try to do. So we let our stops run to keep the price moving up when price moves up. So we let our stops trail and let the price run so we can get maximum value. But we also take more off at each key level. So we already took half off at the next level, whether that's at 605 again here or higher, up here around 605.79. I would take another half of my remaining off, so a quarter, basically. And then if they push through that, we'll get to the next one. We'll take a little bit more off, and so on. So we're basically looking at key resistance and support levels to take profits after we take our initial 20%, because the reason we do that is that's a high likelihood of rejection. You can see they've already rejected this one a little bit. It didn't stop us out, but they've rejected it a little bit. So it's a high level of rejection opportunity here. And we want to take maximum value. If this is the top, then we got a third or half out at the top. And there's very often that can be the top because they're going to pull back pretty hard off of it. So we try to maximize our value by grabbing key resistance or support levels for profit, and then moving our stops, letting our stops trail 50 cents to give us enough room for these micro pullbacks and then breakthroughs. So hopefully that made sense, Mark. Remember, it's okay to miss a trade. It's okay that, because I went aggressive here and I did not take, $1.60 or so at the 605 level. It's okay if I get stopped out. I'm not going to be mad about that. There's no regret of me going, God, I should have done this. It's just, I played this one aggressively because I like the structure and I think that they are going to try to challenge higher. And so that, I just live with that decision and I'm okay with it. Like, it's very much akin to the mindset, and I'm not saying that I'm this person or that I'm just saying the mindset is similar to guys like Michael Jordan, Kobe Bryant want to take the last shot because they are confident in what they see and what they do, and they know they can make the shot. And if they miss the shot, are they going to be mad at themselves? Of course, they're competitors, but they also know that they'll do it again next time because they think it was the right decision. Just based on what I see here, I think it's the right decision to try to let them be a little more aggressive, or try to let them break through and be a little more aggressive with the trade. And if I miss, if I'm wrong, I'm okay with that. It's not going to sit with me and be like, oh, now I got to get back that money I missed up there back. It's just simply the end of the trade, and I move on to the next trade. So do you also change your stop loss based on, for example, the current pullback? No, the stop loss sticks. It only moves when price moves up. So right now it's at $1.20. If price goes to, say, $1.80, it would move up to $1.30 and stay there until price goes to $1.90, and then it'll move up to $1.40, and so on. Never change your stop loss in the wrong direction. In other words, right now my stop loss is at $1.20. If they start coming down toward it, I'm not going to be like, you know what, this looks like it's going to go back up. I'm going to move my stop loss down to $1. Never do that. That is a recipe for failure. Always move your stop loss in the direction of your trade, in this case, up. This is how you maintain small losses. When you set your trade originally, you never move your stop loss. You just get stopped out. That is it. And then you move on to the next trade. It sucks to get stopped out, but it's part of trading. It's just what's going to happen. And if you keep moving your stop loss because you think the trade's going to go a certain way, you're going to keep moving your bank account down. Your trading preference and your risk tolerance is your trading preference and your risk tolerance. I know I just said a loop there, but the loop means me and you are different. You may say $1.60 is a really good win here and I'm happy with that. And that's perfectly fine. There's nothing wrong with that. I may say $1.60 is okay, but I'm looking for $2. And there's nothing wrong with that as long as both trades are managed in a profitable way. My trade will be profitable, but less if it fails. Your trade will be profitable, but less if my trade succeeds. So both of us have an option to take less profit than we could have gotten and still be successful. So there's no wrong way to trade as long as the numbers make sense, the trading plan makes sense, and you follow the rules. Your risk tolerance can be, you know what, I'm good with 30% on my trade or whatever number it is on my trade. I don't want to risk going any higher. Now, one issue I have with that particular mentality of closing out a trade completely is you never give yourself a chance to run, and you need those runners to balance out things to kind of maximize your gains. So if you just say, on this trade I took $1.60 where you only got $1.30 or something. Yes, but if it went my way, I could have gotten $3 to your $1.60, and that's a big difference, and that really makes a big difference at the end of the month. So the more conservative style is not going to lead you to the same type of gains that I get, but it will still be a successful trading style. Every time I say gains, I think of a power lifter drinking protein milk and saying something stupid because they crack me up. Got to maximize my gains. So we moved up here. My father-in-law's got an RV parking spot with hookups, and so we stayed there for the first week I was up here. There's a rooster right next door, and he never stops crowing ever. And it's pretty annoying because he starts at about 5 in the morning. And on trading days, that's fine because I'm up at 5 in the morning. But on Saturday and Sunday, I don't like to be up at 5 in the morning. Well, we'd like to give them a break. We don't want to have our kids infiltrate their house all the time. So we came up here to the Snohomish River, and king salmon are running and stuff. So it's kind of nice to be up here. But I swear to God, there's a rooster right next door that won't stop crowing. It's like he got in the RV and came with us, and it is non-stop. It is so annoying. Side note, storytelling. So this call wall here, this is going to be typical behavior at any kind of major resistance. You're going to see this kind of stuff. And then when the bulls win, you'll see a squeeze up into this area here. It's 605.79. when the bears win, you're going to see them come back down and test, at a minimum, the 21 in VWAP. But also yesterday's high would be a decent area to test here before continuing like that. So we'll see who wins here at the 605 level. If it's and as a caveat to this, by the way, one of the reasons I did not take anything up here is that we took right here. So our 20% win was right here, and they didn't move up very far. So I want to give them a chance to maximize this run out. And while I could have taken some here, again, I know I went through that, but had we had profit down here, so I had 603.89 or something, or 604, and we came up to 605, then yes, I would have 100% always taken profit here. But because we took profit like right here, I want this to have a chance to run out because, you know, the extra few cents to me weren't going to be a game changer. Did you send Dolly the Rottweiler to sort out the rooster? I would like to. I would like to let her go find out what that rooster's all about. Dolly Parton. So, funny thing about Dolly's name, since we're telling stories while we wait for the market to do stuff, or, well, I'm telling stories, I guess. I hope I'm not boring you. I got her during COVID 2020, and I had a Rottweiler named Debo because of the movie Friday. So if you're familiar with Friday, Debo's the big psycho guy that rides the bike, and I thought that was appropriate, and he acted like him. It was great. I wanted to name this one Cersei from Game of Thrones because I wanted her to be the meanest bee there was who would do anything to protect her family. Now I say meanest. She's a sweetheart. She's a nice girl, but if somebody messes with us, she is not. She goes at my front door at my old house like she was going to go through the window on the door, and it was a little scary sometimes. But I wanted to name her Cersei because I thought that was a cool name. My wife said, no, we should let Bobby, who at the time was, that's 5 years, so 2, pick her name. And I'm like, she only knows like 20 words. And so she had a doll with her, and she said, Dolly. And I said, oh, great. What a cool name. So we have a Dolly bear. Everybody thinks Rottweilers are so vicious. My 7-year-old controls that Rottweiler like it's a stuffed animal. She lifts up its lips, sticks her hand in its mouth, tackles her, climbs on her. Lincoln does whatever he wants. Doesn't matter. Rottweilers get such a bad rap because we have another dog, Lola, who's a little like Jack Russell mix, and she will bite you 1,000 times before Dolly would ever bite you. But if Dolly bites you, it's going to be awful. So Rottweilers get a really bad rep because of that, because they're so big and powerful that when and if they do bite, you're going to know. Whereas when Lola bites you, it's like, it stings, but it's like, stop it. Rottweilers are the sweetest dogs, unless you mess with them. Consolidation mode here. Hopefully we can hold and spike higher, grab a little more profit. If you're not in our room, we did take a swing long a few days ago, and that's doing really well. We've already taken a third off at profit. I'll probably take another third off if they get back up to the highs today, at about probably $9 or $10. We got in at about 580, and right now it's trading at 8 and change. So, we're not just day trading. We do swing trading as well. We do a lot of 401k management. Like I said, we got in a precious metals fund back in April of last year. That fund was at 49. It is now around 90. So people in my room who took that advice, or even got into just GLD and silver, like I said, mostly GLD, they absolutely crushed. Their 401ks are absolutely exploding. So if you're not in part of our rooms, or you're not part of our service, or you don't have the indicator, you're really missing out on a lot of fun. Of course, we have good and bad days and weeks and months, but again, good far outweighs the bad. And it gives you somebody to talk to while you trade. Trading's boring. If I was just sitting here watching the computer by myself, I'd lose my mind. But when I can read comments and interact with a group and help people and see them succeed, that really makes it fun. I have a St. Bernard. No one is afraid of him. He's a gentle giant. Yeah, it's funny because they're twice as big as Rottweilers, and nobody cares because they're considered, what are they, first aid dogs or whatever. They have the cartoonish version of them has the big barrel around their neck and stuff. St. Bernards are great. Is your St. Bernard named Beethoven? If it is, I'm going to be disappointed, Sean. That's too cliche. All right, here we go, Bulls. Let's go ahead and break out here. Coming right into the 605 area now. They came up short of it earlier, so we'll see. They can definitely still reject here. They have not done anything to break through yet, but they're actually getting up to that 605 number now. So we'll see if they're able to fully push through or, reject here. We are in a full buy cycle now, so the next indication we would get would be a sell signal, just so everybody's aware of that. Do you use Bookmap or Level 2? I don't know what either of those are, so the answer would be no, I suppose. I'm mostly a creature of habit when it comes to the tools I use. I've either created my tools or I have tools I've been using forever. So I assume those are tools, and so I don't branch out too much on that kind of stuff because I am... One, I think that too much information creates problems. You get information paralyzation, or whatever they call it. Analysis paralysis. Too many forms of input muddy the water, especially if you're seeing them all at once. If an algorithm is compiling them all at once, that's different because you're just getting the output. But when you see them all at once, you don't know how to interpret that information because you get a lot of conflicting signals. Hardly ever do you get everything on the same page. So no, I assume those are tools. If I'm wrong, then I apologize, but I have not used those, whatever they are. Level 2 time and sales bookmap is something similar. Okay. Yeah. No, I've never used them. I use they show order flow. So for order flow, I use Mentor Q, which you can see on the screen, and there's another one called Volume Leaders that's not on the screen. It's just a website, but they tell you where the block trades are and on what stocks and kind of what kind of trades they are, whether they're sweeps or blocks or whatever. And I find those to be extremely helpful. They often identify major highs and lows where the market's been rallying into a resistance zone, and then you see a very large block trade come through. Very often, that is a sell. And if you see the market plummeting into a major support zone, and you see a trade, very often that's a buy. Yeah, 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 yeah. Guys, I may have to cut the stream short today. We just can't. My wife's family cannot catch a break. Her grandpa went into extended hospice, I don't know, a couple weeks ago. And, you get up to 2 years in there, but she just got a call that I guess they're saying today's probably it. So she's got to get ready and get out of here. So I'll need to watch the kids and stuff so she can go. Her family's just not, man, I've never seen so much death in my life. And none of it's in my family. I mean, my dad's been sick for a while and he's still kicking, but anyway, I will I'll stay on for one or two more bars here, see if we can push through, but you guys are going to have to unfortunately be on your own. I'm going to have to cut this short. I do apologize. This is not ideal for anybody, and yeah. Before you go, can you provide targets? Yeah, 605, then 637. Well, actually 606, 60, whatever the high is here. 605.79, then 606.37, and then 608, and then 609. Hopefully, you guys were able to see the benefits of the indicator today and how it works. Again, trying to see if they can blow through or push through the 605 level. I'll probably end up closing my trade here shortly and posting it in the room just because I got to do some things. but I can't monitor it. But please keep yours open, keep your stops right, and move it up. Hopefully, it's a blowout trade, and you guys do really well with it. I do appreciate everybody being here. The code monthly 30 will be up. It'll be up for a while, and if you did purchase, I'll try to get you set up before I get out of here. Thank you guys for that as well. I appreciate all of the support, and I'll be back here. I'll be on for the midday call, I think. I don't know. I'll play that by ear. So if you're in the rooms, just know the midday call either may get moved or canceled, just depending on what's going on. So I do apologize, guys. We will reconvene later, and maybe I'll live stream Friday or something to make up for it. So have a good day. Happy hump day. Hope you guys have a great week if you're not part of my rooms. And like I said, maybe again this week we'll do it. If not, definitely next Wednesday we'll do it again. So